particularly big and attractive fund. The question is investing in that unit trust type arrangement provide any more benefits than, say, buying a Fonterra corporate bond at the moment? And presumably it will need to.
But unit buyers will have no voting rights, will they?
No. That's right.
They can't, really.
No, they can't. And I think Fonterra has gone out of its way and has done a pretty good job to appease the concerns of farmers about control. And I know, I mean, I certainly get plenty of people in the financial community who would say, you know, they should be going a lot further and would like to see a listing. I mean, people are desperate for access to dairy investments in this country. So I think there'll be plenty of demand. But I think they've done a pretty good job of meeting the concerns of farmers at the same time as getting something going, because it's uncharted territory. But let's see how it goes.
Well, Nick, the chairman of the Capital Markets Task Force, Rob Cameron, I mean, says the share trading will be huge. I mean, Corin's just talked about, you know, a good, strong demand for it. Is he right when he says outside interest from the public will be very large and very liquid, as he put it? Do you think there'll be plenty of interest out there?
I think there will be interest. Well, I guess we'll have to see exactly how much it is. But as Corin made the point, if you're trying to get exposure at the moment to the dairy sector, which is our biggest export industry, you really can't. So this does provide a channel through which people can get some exposure to the fortunes of the dairy industry. And it gives the farmers a little bit of having their cake and eating it too. It's a way of getting some capital outside of dairy farmers, which I think Fonterra really does need. That, you know, need extra capital to be able to expand, but by retaining the voting rights to any shares that go to those non-dairy investors, it means that, you know, the dairy farmers are retaining the control over Fonterra, which is obviously very important to them.
So the impact on Fonterra really would be the increased availability of capital. If
you are able to bring in these outside investors, it should be boosting the amount of capital they've got. And with the cooperative structure, really they've been reliant on debt and more debt if they are going to expand and try and retain the strong presence they have globally. So this is a way of getting some outside capital in. So the more the uptake of it, you know, the more flexibility Fonterra will have for its future plans.
Now, Nick, just to go back to the OCR, which we touched on in the first part of the program, gone up 0.25 percentage points last week, just after we'd finished recording, so we weren't able to convey that information. But the speculation, of course, was that that would happen, and indeed it did. Do you think we're going to see this being incremental over the succeeding months, that Dr. Bollard will be putting it up by 0.25 basis points every month?
Yes, well, we have the 8 meetings a year, pretty much every 6 weeks, and our expectation is you will see a 0.25 increase at all, if not most of those meetings. So where we see the risks are, it's more about the Reserve Bank might pause rather than lurch and do some rather large increases. So yeah, it's a very different world. Lots happened around the world. Lots happened with bank funding costs, for example. There are a lot of challenges in trying to assess just what impact those rising interest rates will have. So erring on the side of caution is probably the way things are going to go. But, you know, rates have started going up, and they will continue to gradually creep up over time.
So I guess, you know, in these volatile times, really, you want a kind of steady as she goes, firm hand on the tiller, don't you, from the Reserve Bank?
You do, but they do have to make sure that they are accounting for development. So let's, for example, the European crisis got worse. That might cause the Reserve Bank to pause and just reassess whether or not it needs to be lifting rates as far or as fast as what it had perhaps originally intended.
Indeed. Now, to the meat industry, Corin, I see Tallies, better known for its fishing interests actually, is looking at a full takeover of AFCO after acquiring a Spencer family holding that takes the Tallies holding to 76% of the company. Is that a good move for the company and the industry, do you think?
Good move for Tallies?
Yeah.
It would appear so. I mean, we don't know exactly why they want to raise their stake up to, what, about 76%, at which point it triggers the takeovers code and that offer stands to other investors. I've seen some brokers' comments. questioning the 37 cents, which I think is what they paid for, and that would then be offered to the other shareholders in AFCO. I don't think too many other AFCO shareholders will be that enthused about that. There doesn't appear to be a premium built into that price.
No, there doesn't.
So that some brokers I've seen have suggest that maybe Tallies isn't interested in the rest of the company. I don't know, but it also, of course, raises the question, I think, is are they really after more access to the dairy industry? And it comes back to this issue we were talking about before of difficulties getting access to it, because, of course, AFCO has a large stake in Dairy Trust and Open Country Cheese, which has 3 major processing plants. And is a small, albeit small, but a leading competitor to Fonterra. So does this then increase Tallies' exposure to that industry? I think that's possibly a motive. I don't know. Of course, Tallies does have some dairy operations itself with some reasonable ice cream production. So there may be some synergies there.
Now, the Crafers and the sale of the farms. Mei Wang and her Chinese backers have failed in their court bid to bypass the Overseas Investment Office on the purchase of the 16 Crafer family farms. They'd maintained they didn't need OIO approval, but they lost that argument. Is that quite a setback for them, do you think, Corin?
It's a setback, yeah, but I don't think it's the end of the road for them on that at all by any means. They're obviously trying all their options. But they'll just have to go through the process now. Obviously there's a lot of stuff going on with this story. Mei Wang herself obviously in court quite a bit with her own private business dealings. And it's difficult to keep up, in fact, with what's going on there. But nonetheless, no, I don't think it's necessarily a setback for them. I think there seems to be a pretty strong determination from Natural Dairy and its supporters to go through with this, and we're also going to see the tender on the 16 Crafer farms is due I think next week sometime, so there's plenty happening here. It's a setback, but I don't think it's the end of the road for them. No,
okay. Well, they're pretty tenacious people, I would think. Now, Textiles New Zealand, Nick, is just back from a trade mission to Russia with talks underway on joint ventures. That should be good news for growers of strong wool, I guess, but won't the level of tariffs, and they range from 50% up to 140%, depending on the product, will that make it hard to grow that market, though, with those tariffs?
Ultimately, it will come down to what price the goods are able to be sold for in Russia, even with those tariffs. What I would say, an encouraging thing, is we have got that talk now about engaging with Russia over free trade agreements. Now,
exactly.
Economists really agree on everything, but one thing most economists agree on, that free trade is good. So, any progress we make on reducing tariffs would certainly help that. But it's encouraging to see signs that we are exploring further opportunities for trade.
Corin, Allied farmers have sold part of the second biggest loan on the Hanover book that they've inherited. That's the 5 Mile project in Queenstown, but Allied's still far from out of the woods, isn't it?
It's a case of 1 step forward, 2 steps back often with Allied. South Canterbury Finance are a bit the same. These guys are battling. They're doing everything they can, and they're having pretty regular announcements. I mean, with Allied farmers, they've had some victories as well. Obviously, with the 5 Mile,
they had a legal victory.
They won a $6 million. They got some funds out of the receivership case involving in the US. They've also had a credit downgrade though for Allied Nation Finance, the finance part. So there's been some setbacks as well.
Back,
again, it's just that they're playing for time in some ways. They're trying everything they can, to try and get themselves out of a fairly tricky situation. We know, of course, that the Hanover assets have been written down by almost a third since they took over those assets. But Rob Alloway, I think, is doing the best he can to get things, to try and consolidate things and get some sort of value back for those investors. But the share price does tell a story. We know the share price fell back down to about 5 cents. Over the last week or so. So that's a concern, that's a performance reading on the company, if you like. So that is a little bit of a worry, no doubt about it. But I'm sure they are doing everything they can to try and consolidate things and keep getting value for investors. Much like others, some others in that sector. It's tough going.
Well, look, thank you both very much, Nick and Corin. Some pretty hot topics there, which I'm sure we'll hear more about in the coming days. Well, up next, we ask our guests, where to from here? Welcome back. Well, another good, lively discussion in today's episode. A couple of points which pricked up my ears. Nick, the whole question of Fonterra and the share trading. What I've been wondering is just where that investment money is likely to come from for people who might avail themselves of the chance to buy these units outside the dairy industry.
Well, I'll only be speculating, but
Sure.
I imagine we'll get a mixture of people. From the mum and dad point of view,